In the first half of this year, growth stocks have outperformed value stocks by about 10%, but is value about to stage a comeback? Let's ask the Trading Nation team. Erin Gibbs with the S&P Global. David Seaburg is with Cowen Company. David, I will start off with you. I feel like we are seeing glimmers of this already in the past month in terms of the rotation into banks and healthcare over technology.
Yeah, no quiet. Look, I mean, technology in particular, I mean, these growthy names got super crowded. Evident in Micron. Look at Micron reports a great quarter. The stocks had a massive run, very crowded long trade. And look at it today. It's down a little bit off a very, very solid quarter. So I look at it and say, just from positioning alone, I absolutely can see that performance gap start to close. I think it'll happen. You could probably see the Qs in general trade off, which is heavily weighted with a lot of these mega cap names. I just think in general, Melissa, it's not because rates or yields are going to get away from us or rocket higher. It's more because of the positioning environment. And we have a market that's really driven off the quantitative investors and the sort of the passive or ETF investors. You know, they're knocking it around and they're driving the bus when it comes to where things are going. So I do not think that growth is dead. I think it takes a near-term pause, maybe a little lower. And you buy it toward the end of the year.
So, Erin, in the value realm, what sort of sectors would you look at?
For us, we're looking at somewhat in technology as well as some of the financials. But we're really looking at this play between growth and value, and even just between the two indices. The S&P growth is underperforming the S&P 500 value by almost 3% just for the month of June. So we've already seen a shift in investor preference. And when you look at just the earnings growth between those two indices, the growth index has earnings growth for the second half of the year at almost twice the rate of the value index. I know that doesn't really make sense. Like, why would you have higher earnings growth for a value index? And why is it named growth? But, you know, this is all about forward-looking growth, not the past. And this is what we're seeing for the next 6 months to even the next 12 months is really just better growth as well as better valuations.
All right, guys, thanks. Have a great long weekend. For more market insights, go to tradingnation.cnbc.com.
In volatile markets, unless you're an extremely short-term trader, it's usually best to avoid buying or selling during the first and last hours of the trading session, as that's when volatility tends to be the highest. And when volatility picks up, often the spread between the bid and the ask price will increase, and that's never a good environment for buying or selling.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.